Hello everybody and welcome to this week's Multitrade Radio podcast powered by eBay Motors Group. It is Saturday the 1st of October and you're joined by myself, Philip Northard.
And me, Curtis Hutchinson. This is episode 53, season 8 of Multitrade Radio, bringing you all the chatter that matters. Once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
I don't know what you thought then, Curtis, when I said Saturday the 1st of October. And you think, where has the year gone already?
Yeah, exactly. I mean, this is just bonkers, isn't it? We do say this from time to time, but it does feel as though it's on fast forward.
Yeah. You know, the fact that we know September, which is, you know, we're still waiting on the final sort of new car registration figures. And I know they were towards the sort of the end of the month, they've been fluctuating just above last year's figures a little bit, but obviously down behind pre-pandemic levels. But you used to now that we're going into this final quarter of the year, and yeah, it's gone already, hasn't it? It's gone so quickly. But yeah, it's and the weather's now turned a little bit as well. But anyway, that's depends where you are.
Well, it's very autumnal down south, and I assume it is up your way as well.
It is. Well, we've had a busy week this week, haven't we, Curtis? I mean, we've had a couple of fantastic interviews to start the week off this week.
Yeah, and it's definitely worth listening out for those. They're on your podcast feed. We started off with our interview with Steve Young, who's the boss of ICDP, and you know he is an industry guru, and that was an interesting conversation we had with him because he was talking about customer care, EV transition, and also Pendragon partnering with Chinese EV car maker BYD. So lots to pick from that particular interview, and it is on your podcast feed. So do check it out.
Yeah, that was published on Thursday of this week. So I mean, we'll talk about the Pendragon and we'll talk about BYD as part of that Pendragon story. But if you've been watching the news this week, and we are covering, should we say, one of the stories this week, Curtis, about the what's happening in the world of Pendragon. But we did talk about it slightly on the chat there with Steve. So I'll just be aware that was recorded earlier on in the week and published on Thursday of this week. So by the time you are listening to this, things could change very quickly on this one.
Yes, yeah, definitely. and this week we also caught up with Cap HPI's Darren Martin for his monthly look at how trade values performed, and obviously the focus very much on September. So we'll actually have an extended extract from that in today's show, but the full interview again is on your podcast feed, so do check it out because Darren did go into a lot of detail about things like fuel types, different sectors, and how the market is likely to perform going into October.
Yeah, and the key with that is, and say we've got the interview there, but obviously, you know, the minute things are changing very quickly in the used car market, very much in the detail now, depending on the model, fuel type, age profile, etc. So, very worth listening to the whole interview there with Darren. And as always, if you do want to get in touch with us, come on the show anytime or send us a press release, then please do email us at multitraderadio@yahoo.com, or you can find us on LinkedIn, Facebook, or you can join the Multitrade Radio LinkedIn group on there on LinkedIn. But you can get in touch with us, or just contact Curtis or I. You'll find us on any of those social channels.
So we'll start this week's show by going straight into our interview with Darren Martin, who is Director of Valuations at Cap HPI. We actually started off by asking him about the headline figure for September's trade values and also how it compared with previous Septembers.
Yeah, so we're seeing a 0.3% increase in September. I mean, that's a small increase, but it is the first increase we've had this year. We've had a sort of a plateauing over the summer, but even during that plateauing, it's been small movements down. So for there to be an upward movement, A little bit of a surprise. We didn't predict it last month. We thought it would be probably closer to level with maybe a small movement down, but it has been strong. But in September, it can tend to be a reasonable month before the volume starts to hit from the new plate in years gone by anyway. So we've actually had either level or a small movement up since sort of 2016. So um, it's not amazingly unusual, but it is something that we weren't really predicting this time around because of all the things that are going on in the world with sort of cost of living concerns, consumer confidence, and supply levels increasing. But supply levels are, well, I mean, there's been very little sign of that. And also from a dealer's point of view, not really much of an impact from the cost of living concerns at the moment either.
Yeah, and before we go into the detail on what's happened over the course of the month, typically how much of a factor is the plate change in terms of the impact on trade values for the month?
Well, there's obviously an impact because certainly in pre-COVID days, September would be huge. March and September, you'd get a lot of volume coming in, and that leads to a lot of part exchanges in the market and cars coming back from fleets, rental companies churning their stock and getting and obviously the chase for market share from manufacturers and the chase for volume. But we're in a different world now, so there's by no means the same amount of volume this September as there has been in previous ones. I think it's going to be similar to last year, but prior to COVID, that it would have been far more cars appearing in the market. So the supply levels do have an impact based on that new plate, but it's probably going to be less this year than it has been in previous times.
Yeah, hi Darren. Yeah, I think it's right, and I think just to your point earlier about it being a busy time of the month, I think every day is busy at the minute, isn't it? With as you say, it's live now, so the conversations with the customers are probably every day for you, not just at this time of the month.
Yeah, everyone's keen to know what's happening, especially because we are in unusual times. The plateauing over the summer was unusual. Prices are high, obviously, because of what happened last year. Values going up. We've still got cars that are 30% ahead of where they were a year ago. We've got cars that are 70% of where they were 3 years ago at the same age and mileage point. So do people expect a crash to come? I don't think they do anymore because we've kind of allayed fears on that one. But I think it wouldn't be a surprise for values to start coming down. And of course, we've still got a lot of cars that are above new car list, which once new cars start to come through in more volume, that tends to not be sustainable.
Yeah, and looking at the sort of sectors and age profiles, I mean, it's fairly stable all the way across. I mean, the 10-year 100,000 mile has shown a weakness, but that's obviously in some monetary terms very probably negligible. Could you just talk through sort of what you've been seeing in terms of that age profile and where those strengths and weaknesses we start to see a little bit?
Yeah, well, anything on our averages, obviously we talk averages, but there's a lot of devil in the detail. But from 5 years and newer, it's an upward movement. So at 1 year, value's up 0.3%. At 3 years, it's the same, 0.3%. At 5 years, it's up 0.2%. And in monetary terms, those are small amounts. They're all sort of less than £50. And we've got a small movement down at 10 years, but that's sort of not across all sectors either. So some sort of upper medium cars, D sector, they've actually gone up at that 10-year point. So it's quite mixed at that older age. But yeah, across the age groups, that the younger used cars are performing well. And as I say, up to 5 years, they're doing okay as well. Looking at sectors, city car is the strongest sector. And those sort of smaller vehicles that dealers are they're lower risk for dealers to stock, so they've been keen to snap those up, and obviously for consumers as well, maybe for their second car, that's a good purchase. And we've seen Fiat 500s, Citroen C1, VW up all gone up this month, so they've performed okay. And as you say, across most sectors, it's very similar movements. So city car stands out, but across other mainstream sectors, they've all gone up by similar amounts, which is quite low amounts really. Anything that's dropped tends to be a little bit more seasonal. Convertibles, coupe cabriolets, sports cars have had a small drop, which is probably a little bit later than in previous years.
Well, Phil, as ever, some great insight there from Darren, and 0.3% gain. That was a bit of a surprise.
Yeah, and I think people are talking about that this week as well. That because of obviously the state of the consumer confidence in the marketplace and what's happening on some of the retail forecourts with pricing pressures at certain points, it didn't feel right that the prices went up. But as we said, there's still a shortage of supply.
Yeah,
But clearly, there, he does talk about that. The strength in the alternative fuel, particularly in that hybrid appetite from consumers, and strength in that EV sector. So yeah, interesting. But again, hopefully we'll get Darren on part way through October, because I think it's key now, particularly as we know that the market feels like it might be on the shift a little bit, that we'll
yeah.
get Martin on a little bit, Darren on a little bit earlier, just to give us a more of a mid-month review of where things are heading.
Yeah, definitely. So headlines this week are from Car Dealer, AM Online, Motor Trade News, and This Is Money. We will actually have a roundup of the full year financials from some of the country's biggest dealer groups, including Sytner, Arnold Clark, JCT 600, John Clark, and Glyn Hopkin. So it is very much sort of full year results time. Also, look at Hedin performs U-turn and now won't block rival bids for Pendragon. So an update on that story. New car buyers are actually prepared to wait despite delays caused by the chip shortages and other supply issues. Two-thirds of motorists against 2030 ban of petrol and diesel cars. We'll find out who they are and why they're saying that. And the return of, and finally, you'll be pleased to know that, Phil. And this week, we've got a really good story. It's new Prime Minister Lynn Truss has to pick a new car. Will she flip from Jaguar to a German brand? Stay tuned to find out.
Yeah, so as Curtis has said there, we've obviously got there's been a few headlines this week of financials now starting to hit as we sort of head out of this sort of the third quarter of the year, and to begin with, there's John Clark Group posted its best ever results as the pre-tax profit rises fourfold to more than 24 million. And that's a 284% rise, selling nearly 33,000 vehicles. That's a fantastic result for John Clark Group up there in Scotland territory.
Yeah, without giving too much of the story away, these are all actually really positive results. So the next one is Glyn Hopkin posts 700% rise in pre-tax profits. So latest accounts show pre-tax profits topped £12 million in 2021.
And Arnold Clark's, they've seen a pre-tax profit soar to 263 million, and that's given a revenue the top of 4 billion. Yes, 4 billion revenue there. So latest accounts show that that made up of 263 million in pre-tax profit for last year. So that's the year ending 2021.
And JCT 600 reveals best trading result as it posts pre-tax profit of £45 million. So the group saw turnover rise by 17% last year to more than £1.3 billion. So pre-tax profit up by 130% to £45 million.
And finally, Sytner Group sees a pre-tax profit soar to more than 178 million. That's a pre-tax profit for 2021 was 178.1 million in total. So revenue was up 18% to nearly 6 billion, and it sold nearly 174,000 vehicles through that financial period. That's a result and a half.
It certainly is. And all those stories, you'll be able to find more detail across AM Online, Car Dealer, and Motor Trade. All three titles have gone into some detail on all those results. So do check them out.
So as we mentioned there, we're heading over first to Car Dealer. We've been covering all the what's been going on at Pendragon and the Hedin Group and Lithia. this sort of triangle there with what's been happening. And the latest one, ahead of publishing this week's podcast, it's just a little bit of a disclaimer that something else could change before you do listen to this. That Hedin performs U-turn on and now won't block rival bids for Pendragon. Now, to understand what that means is you need to understand the stories that led to this, don't you, Curtis?
Yeah, very much so. And, this is, it is a moving story. It is chopping and changing almost on a daily basis. But this follows last weekend, we mentioned about Hedin putting in a bid based on 29 pence per share, which values Pendragon at around £411 million. And there was a strong indication that they would block, as the major shareholder, because I think they've got a 27%
27,
stake, in Pendragon, that they would block any other bids. But that's changed this week. That they've said that they will, that they won't block any bids over at or over 35 pence per share. And this appears to be prompted by an announcement made by Pendragon during the week that it was conducting a review of its operations. And Hedin released a statement saying that it was surprised. And when the major shareholder says it was surprised, that word actually covers a lot of ground, doesn't it?
It does, yeah, because they said that they were surprised by the announcement, which seems to contradict the long-term view of the Pendragon board, that the Pinewood continues to be a functional aspect of Pendragon's strategy, which was reiterated in Hedin Mobility by Pendragon as recently as September the 25th of this year. And they said here that they continue to say that in light of this radical change of direction from Pendragon board, Hedin Mobility is considering its position in relation to the current shareholding. Now, if you've ever looked at the financials for Pendragon, the Pinewood element of the business is a very critical, crucial part of that business, isn't it, Curtis?
It's very much the jewel in the crown and has been for many, many years. It is a well-established and widely used DMS system, across the UK, and a major contributor to Pendragon's profitability. So I guess that the argument is, does it stay part of Pendragon, or does it get hived off? Does it get sold? And I think this is the crux of the story. This is what is being discussed by the board of Pendragon, and also by the Hedin group. What happens with Pinewood?
Yeah, and I think there's going to be a lot more to come from this, isn't there? I think there's we'll see. We're obviously still the confirmation on the BYD, considering being a Pendragon being a UK distributor for the Chinese brand, as we said there in the interview with Steve Young. I don't know if that's been fully confirmed yet, but the talks are certainly taking place. And again, that'll change the structure and the strategy of the business, being a distributor for a Chinese manufacturer.
Yep, and no doubt this time next week we'll be back talking
It seems
about
to be that one of them stories again.
Pendragon and Hedin, and we'll try and keep you in the loop with how that story unfolds.
Exactly.
You're listening to All the Chat That Matters on Multitrade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So moving over to Multitrade news, and this is what Curtis said: the new car buyers prepared to wait despite delays. Now, this is part of some research by Judge Services, the friend of the show, who hopefully will get Neil back on at some stage when he's got a report to share. But in the meantime, what they're saying is that they found that over 3/4 of buyers know there is a global semiconductor shortage and are prepared to wait for their new car. So yeah, it's a good. I mean, it kind of supports the view of the sector at the minute that there is a good bank of new cars still to arrive that consumers are still waiting for.
Yeah, and it is an interesting piece of research, and I've seen the data because I worked with the guys at Judge Service on this particular release. So the research is of over 3,000 car buyers who have made a purchase within the last 3 years, and this is all part of the Judge Service State of the Nation 3 annual report, which is coming out next month. Well, next month, October, this
Mm.
month. We're here already. So the research finds only a small number of buyers expect to switch from new to used to avoid long waits. So this is all about the sort of level of awareness. So awareness of the delays in new car deliveries is very, very high, and 85% of buyers say they know about it and are now factoring that into their buying decisions. So despite car brands quoting long delivery times, 76% of these buyers say they're actually happy to wait for their first choice, with only 16% saying they will consider an alternative new vehicle from a different brand to beat these long lead times, while interestingly, only 8% say they will consider buying a used car instead.
Yeah, and I suppose this is, I think there's many people that, I suppose a lot of this is about communication with the customers, isn't it? The dealers and retailers will be fully focused on, and it's probably one of Neil's conversations regularly with the dealer network that, this is probably a time where the dealers really do need to keep in communication with their customers throughout this long lead time. There's nothing worse than ordering something. Okay, at the time you might be accepting that it's 6, 8 months, 10 months, 12 months away, but actually, if you don't hear anything for that significantly long
Yeah,
period of time,
exactly.
it's
Yeah.
it's a big gap, isn't it? So I think the key now is for retailers just to make sure that they do keep in contact with their customers, because the view there is reports that there are bits of cancellations now starting to enter the sector, and that might be that the consumers are just bored of waiting, or they're a bit concerned with the cost of living crisis that what they're looking at there, or they've just not heard anything, and another product, another deal has become available, and they've jumped towards that. So I think key for retailers now is this contact with customers all the way through this as they're waiting for those new cars to arrive.
Yeah, and of course, this is very timely with the 72 plates going on sale in September. And good comment here from Neil Adley, MD of Judge Service, who says new car buyers want to stay as new car buyers. They don't want to compromise by buying used, even though they know they face lead time stretching for over several months. So some interesting context behind that.
And remaining with that kind of subject, I mean, there's a report here in AM Online, and this is talking about the ban of petrol and diesel. I think some of these lead times are not quite far out as 2030, are they, Curtis? I mean, it'd be the question if you've got a car that when you order it, you think you're going to get it in time for the 2030 deadline, and actually it doesn't arrive in time for that. That'll put you in a bit of a position. But a report here that a company called iComperio, I think it's pronounced, which is a study they've done where there's findings that 2/3 of UK motorists are against the proposed ban on selling petrol and diesel cars after 2030. Now, this has always been a debate, hasn't it, whether the UK government will remain with a 2030 ban compared to 2035 in Europe, or whether there's an option to extend that back. But there's a lot going on from a manufacturer level to meet that deadline as well.
Yeah, and according to this research, understandably so, affordability is the
Mm.
key concern. So the study highlights that more than 8 in 10 over 55s feel they can't afford to switch, whilst affordability is also a concern for 83% of motorists in Wales and 80% in Scotland. So that is sort of widely spread across the country. But it's quite interesting that 43% of that younger demographic, 18 to 24-year-olds, say they are confident of having the cash necessary to make the switch. So, they're not too bothered about putting off the ban.
Yeah, and I think there's a lot going on here, isn't there, with the cost of living, the cost of electric now. Whether that's home charging or public charging, the cost of kilowatt per hour has been on the increase through the supply energy cap issues that have been taking place. So I suppose that the total cost of ownership of an EV, where you may have had the benefit of a low cost of home charging, may not be the case now. But at the same time, the affordability, the purchase price of electric vehicles with the new entrances that are coming into the market is changing as well. And in Darren's interview, we did see where there is a demand now for used electric vehicles, be it plug-in or hybrid. So the market is starting to change a little bit as this view towards electrification and petrol and diesel.
Yeah, absolutely right. And yeah, there's certainly indications that dealers on the used car side with EVs are actually selling them quickly. Yeah, there is demand for them, but albeit from a very low base.
Yeah, so there is a quote in here from Kerry Fawcett, who's digital director at iComperio, that she said that it can perhaps be unsurprising that with the current cost of living crisis, so many are worried and about being able to make the switch to EV. It is important to continue to look at ways to make EVs affordable for homes and businesses and accelerate effects to provide information to people ahead of the 2030 ban. So really coming at it, that the fact that there's still a lot to do in there. A lot of it is about this knowledge and communication with both customers and businesses as we move towards this 2030 deadline.
And finally, the return of and finally, Phil. So we're heading over to This Is Money, and the headline there is the new PM has to pick a new car, but with Jaguar axing their limos, will it be a German motor? So quite a long-winded headline there.
Well, you can't expect any less from This Is Money, can you?
No, that's pretty much the first paragraph. But this is quite an interesting one because from Ray Massey, has been motoring correspondent for the Daily Mail, which is of course This Is Money. That's where it comes from for many years, and he's sort of tracked the sort of changing cars of the PM and Downing Street over the years, over the decades. And this is particularly interesting because Jaguar XJ is the sort of standard issue Downing Street car, and that has been for some years. But Jaguar won't be replacing it with an EV model in the short term. It was expected, I think, over the next 12-18 months, but it's now been put to one side, and we won't be hearing about what replaces the XJ until 2024, with the new car coming on stream in 2025. So this does leave a bit of gap in the fleet, and the speculation is from this story that the car may be replaced with an Audi A8.
Yeah, I mean that's what. Without bringing too much politics into this one, it's difficult not to when we're talking about company cars for the politicians. But is it the way things are going at the minute? It'd be taxi for trust, won't it? I think more than anything
Yeah.
else. I'm not sure.
Yeah, no, you've got a point. It must be said that Audi have done a brilliant PR job over
Yes.
recent years in terms of who's been seen driving their cars, because they work very closely with the royal family. We've seen William and Harry driving Audis, and of course Diana before that.
Yeah.
And they do have very close relationships with these VIP fleets.
Yeah, so it just feels it feels a shame, doesn't it? Because you do see those XJs, with whoever the prime minister and government officials are that have been there. But as you say, with this sort of transition to EV, if that's not going to be the case, then they do have to pick an alternative. And they say they've jumped straight on the headline there that it may be a German manufacturer. I'm not sure it could be worse than that or any different than that. I wouldn't like to speculate. I don't know if you would, Curtis. I don't
Well, in the interest of keeping things nice and balanced,
know.
it's worth pointing out that Tony Blair did actually run a BMW 7 Series, and again that was because there was a delay in the new generation XJ at the time back in the 90s. But that didn't stop John Prescott from running two of them, of course.
Well, yeah.
Two Jags Prescott, yeah.
Yeah, exactly. So, again, if you do want to read more about that story, and then again, with anything else on the podcast, do head over to any of the publications we've mentioned there. Read the stories in more detail, and as you say, the Pendragon story, I suspect that's going to go on and on for some time yet with what's going on there. But yeah, keep a close eye on what's listening. And as we said right at the start of the show, don't miss the full interview there with Darren Martin, as Curtis said, still available on your podcast feed. Fantastic, as always, interview there with Darren, and hopefully we'll come back on at midpoint in October to give us a brief update on where the market's heading. And as always, fascinating interview and lots to think about when you stop talking with Steve from ICDP, because he does throw little bits to there that make you think about where things could be heading and what's happening in the marketplace. So again, on your podcast feed, do tune into the interview there with Steve Young from ICDP.
But unfortunately, that's all for now. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chatter that matters. We're back with the headlines next weekend, including a review of September's new car registrations. Until then, it's goodbye from me.
And it's goodbye from him.